Welcome, everyone. This is the last panel of the day. I know what we're all thinking. This is it, happy hour after this, but we did save the best for last. So without further ado, I'd like to introduce my panelists. They can just come on out whenever. There we go. Thank you. So to my left is Matt Mills, President and COO of MedX, currently live on StartEngine right now and has raised just past $5.7 million on Reg A+. To his left is Mark Hanchett, who just closed a $1 million Reg CF raise with us, and StartEngine has got some exciting plans to share. And to his left is Hill Davis, President and CEO of Digital Brands Groups and Distilled, who has done one of the most experienced companies in the Reg A+ and Jobs Act landscape, and is looking to do a third Reg A+, fourth with StartEngine coming very soon. So why don't I'd just like to open this up to you guys first, introduce yourselves, and provide a little bit more context on your business, and we'll go from there. Matt, we'll start with you.
So I'm Matthew Mills. I'm the founder of MedX. I play the role of Chief Operating Officer and President. We are a natural products company, an information company. Our flagship product is a professional pest control product that's 100% natural, that's now moved into the professional field of pest control, hospitality, sanitation, transportation. And our secondary products are in the healthcare field, finding ways for patients not to use so many drugs. Very grateful for the opportunity that we've had with StartEngine. We were the second company to prop up on StartEngine, the second company to be qualified by the SEC. And we've had a lot of, a lot of success that's been driven from failure, quite frankly. And there's a big story behind everything that we've done. So it's a pleasure to be here. Thanks for having us.
Thank you.
My name is Mark Hanchett. I'm the CEO of a company called Atlis Motor Vehicles, and we are developing technology centered around the electrification of pickup trucks. In particular, we are focused on building advanced technology that is not seen in the market today. So we're developing a vehicle that can charge in 15 minutes or less, which there is no other vehicle on the market today that can do that. High-powered charging stations, longer range, as well as significant improvements in performance in cold weather, hot weather. Those are areas of the market today that are there's big gaps, and we're looking to fill those.
Hi, my name is Hill Davis. I'm CEO of Digital Brands Group. We have two brands, which is Distilled, which is a streetwear brand, and then A Studios, which is a tailored clothing brand. Our whole concept is we will grow through acquisition of brands. If you're familiar with like LVMH or PVH or VF Corp, we believe that there's a lot of revenue growth and eliminating of expense through this. This will be our fourth Reg A+, and I think we've learned every single time we've gone through them. And I'm happy to share a bunch of those, but I think the key is it's a lot of FOMO, which we'll talk about. I think that's been helpful for us.
Yeah, so Hill, we'll just start with you with our first question. I think most in the audience here are entrepreneurs looking to raise capital. One of the most fundamental questions is, how did you choose equity crowdfunding? And how did you make that decision that you knew was right for your business, especially along with MedX here, one of the first companies ever to try Regulation A+ all the way back in probably 2015, 2016. So what was that decision like for you, and why do you think it was the right one?
Yeah, so I had a company previous to this called J. Hilburn, which is a men's custom clothing company, went from 0 to 55 million in 6 years. We brought on venture capital out of the Valley. Also, Mark Lynn, one of the co-founders of Digital Brands Group, started a company called Wink, which is located here. It's a direct-to-consumer wine company. Also took money from the Valley. We raised about 35 million. I think they've raised about 45 million. And we just had really bad experiences with venture capital. They don't know the industry well. They're very short-term sighted. They write you a $10 million check. They tell you to go spend it in a year. And then if you hit your numbers and a partner is blackballing another partner, you might not get the round, and then they underwrite it. Like you're handcuffed by them. It's a really bad experience, and they don't understand consumer, especially. So we decided early on that we would not go that path, and this made a lot of sense. Secondarily, previous to that, also I was equity research, covered publicly traded restaurant, retail, luxury good companies, all the way from what they call the sell side, Thomas Weisel Partners, to a large hedge fund, Citadel Investment Group. What I saw there was a lot of the brands, NASDAQ used to be what the OTC hopefully will grow into, which is a really strong market for micro cap, small cap companies. And what happened is companies like Starbucks stayed on that market and grew from a 50 million market cap company to now 30 billion. You actually see that over in the AIM market in London. That's a very similar market. And if the OTC does it right and this works, that's what should happen, is that it becomes the OTC to the NASDAQ or the NYSE. So I think that's the big opportunity, and we'll talk about how we're thinking about that as well. But we didn't want to go VC, and we also felt that as a consumer company, having your consumers who are buying the clothes also own shares is a really powerful way to grow your basically investor base and your revenues.
Right. Mark, same question. How did you choose equity crowdfunding, and how did you know that it was right for your business?
Yeah, so very similar to the reasons that he shared here is we were looking to build a company that was customer-owned, that was community-owned, an automotive startup that was very much so focused on building the right products for the right customers, not the right products for the right VCs. We want to make sure that we're building the right teams, the right internal communities as well that are not necessarily influenced by a lot of those external factors when you start bringing in large amounts of money. And it also allowed us to go out and simply just verify that we're building the right product. If our customers, if we can go from 0 to 10,000 to 20,000 to 40,000 potential customers in the market today, and they can come in and then invest in our company, that tells us that they believe in us, that we're building the right product, and that's the right message that we want to receive, and that's what we want to give back to the community.
Matt?
Well, my situation's a little different. In 1998, I walked into a company that was a pawn shop chain that was bringing its customers together as investors, accredited investors, and it ended up being a company switch, which basically acquired those assets. We raised $20 million in a Reg D offering, and this is in the late 90s. Into 2000, we raised $20 million. In 2004, the company went to the NASDAQ, did $200 million in revenue and a $600 million market cap, and I was the Chief Operating Officer, Investor Relations Director. So when the Obama administration jumped in and the Jobs Act of 2012 came to play, I became, I'm not trying to pat myself on the back, but I became a historian in this subject. So our company, MedX, was one of the very first companies in 2013 to launch a 506C using the ability to solicit investors. And we ramped it, and we put the company together operationally. And I just saw that this is the way for us to move forward following this historic event. And that's why we were the second company out there to use this Jobs Act of 2012. And it's been a run, and now we're growing. We just got ourselves positioned to move to the NASDAQ, and it's a fun run. And I haven't had any VC money at all. It's been a grind, but well worth the grind.
Great. We'll get to that NASDAQ part a little bit later. I think one of the most common questions I get from entrepreneurs is equity crowdfunding. It seems like a lot of work. Raising money is always work, no matter if you do it through crowdfunding or taking hundreds and hundreds of meetings. But one of the most fundamental questions is, how am I supposed to raise this money with this effort while also running my own business? That's two things in one. So can you guys talk to your experience on raising? You guys have all been very successful raising a large amounts of money. Matt, we'll start with you. How have you been able to juggle raising money for your business but also running the business at the same time?
Well, this is about pulling in partners. I mean, quite frankly, this isn't a one-man show. I might have been the historian, but, right out of the gate when we started this company, I employed or basically partnered with a couple of attorneys. One was an SEC attorney who wrote all of our documents basically for stock. I covered all the costs, and then I have a general counsel attorney. I brought in a couple of physicians, filled a board, and basically was not greedy with the stock. I passed the stock around, brought operational people in as we started raising capital, and really got everybody to get their jobs done while I continue to raise the capital and position a capital raising team along with StartEngine coming into the picture. Made it a lot easier, and in some aspects it made it just have to go wider. So, I mean, it's a loaded question, but that's really the gist of it. I mean.
Yeah, Mark, I know that you're building a prototype, so you're a little bit earlier stage in the business, but that requires a lot of work. Talk about how you had to do that, and also have those assets ready for your equity crowdfunding campaign.
Yeah, so a very similar story to you and launching the campaign. At the very beginning, it was just basically me and a couple of colleagues working on this part-time. And the first thing I did when we started to raise funding is I started to build a team, because there is no company without that team. There is no progress without that team. And quite frankly, we wouldn't be where we are today without the different team members that I have on at Atlis Motor Vehicles. And that's super important as you move forward, is finding the right people that can take that burden from you so you can focus on what's important. And that's what we did here at Atlis.
Yeah.
Hill?
I'd say it's actually really hard, because you're having to, outside of the legal and the kind of what I'll call professional services fees where you can bring them in, you really have to tap your internal organization. So Hannah, who's over there back, Hannah, raise your hand. So Hannah's been with the company for a long time, and she's actually spearheaded all of our Reg A's. But then she was also having to do other stuff as well. And then we'd have to pull in the marketing team as well. And so they're having to flip-flop between jobs. And then you're thinking about how to acquire customers, and then you have to think about how to acquire investors. And it leads to some long hours, and it kind of comes in spikes. Like a week you'll be there really late. So it's a lot of tax on the company. Now, I think one of the things that's happening is you're starting to see a lot of different service providers even on that side start to pop up. And the way I look at it is there's a platform in e-commerce called Shopify and Shopify Plus. They started out really small, and now they're, I think, a $20 billion market cap company, because basically it's almost different than Apple, where all these apps started developing around them and more users came in. I think if you go back when we first started raising, the big thing, there was no network at all. And then the professional services network grew around it, and I feel like it's there. A marketing network starting to go around it, but more importantly, a network of potential investors, because of companies like y'all have come up, and that makes it so much easier, because there's a larger, what I'll call, warm market, where when we first started, there was no warm market. I mean, you were literally pitching, everyone was a cold customer, never heard of it. So I think it's only going to get easier and easier, because you've got multiple networks of service providers for legal and accounting. You've got service providers for marketing now that are starting to pop up, and most importantly, the network of customers or investors.
Yeah. Mark, I wanted to start with you on this next question. You recently raised $1 million from 1.07 million on StartEngine. I think everybody here, there's over $10 million raised between all three companies in equity crowdfunding. I think we're all wondering, how did you do it? So Mark, I want to start with you. Kind of share with the audience your experience in equity crowdfunding and how you're able to raise that amount.
Yeah, so I'll try to do this as short of a story as I possibly can. But when I started this, from a social media standpoint, we had maybe 5 followers on Instagram, maybe 20 or 30 on Facebook. No one knew who we were. So the day that the campaign went live, that moment that I got the email from Diana, I texted every single person in my phone, every single one of my contacts. I just went out there and just said, even people that I hate. I was like, go
now
check
you
this
love
out.
them. They invest.
No, I may not still like them, but they may have helped. So maybe
So it sounds like a shareholder.
Yeah. So But that's what I did, and that kind of got the momentum going, and that got the campaign going. And as we did that, I took some of that funding out, and then we started to grow from an advertising perspective, started to reach out further. And as the campaign grew, as we started to raise more funding, again, I was able to bring on more team members. We were able to accomplish more things. We were able to redesign the product. We were able to accomplish some of the testing that we're doing, and we shared that with the community as we continued. And as we did that, we were able to leverage some of those accomplishments, some of those changes, and put that out there with the media. We were able to put that out there on social media. We were able to do that with press releases, and we started to get actual bloggers paying attention to us. We started to get news agencies paying attention to us. We started to get interviews going, and it sort of grows organically like that. And of course, we leveraged a tremendous amount of help from the StartEngine team. As we were trying to grow our exposure in the market, we were trying to grow our following on social media, and that's kind of the short and sweet, I guess, story. Is we started from nothing, and we just very slowly, and then all of a sudden, incredibly quickly, grew to the point where, and I'll share this, is in the last month of the campaign, last couple weeks of the campaign, we went from $700,000 to $2 million. So we were oversubscribed by almost 100% of our campaign goal. And it's all due to that sort of slow progression. And then that big push in the end, we didn't do any press releases. We didn't do anything like that. It was just, it's something that naturally grew. And when we made one simple update to the website, everything just exploded.
Now, Matt, I want to go to you. Your story is a little bit atypical with the way that you're allowed to advertise your offering in the industry you're in, and I know you've done some really incredible things. We were talking about it backstage, but I'd love to hear your success story. You've raised over $5.5 million in Reg A Plus, so please share how you were able to do that.
First, it wasn't easy, just so everybody knows. This took a lot of work. Luckily, we understood the road that we were on, and we saw Reg A Plus coming. Obviously, we used Reg 506C as our seed capital to pay for all the things that we needed to pay for to set this company up. Right out of the gate, we were the second company, so I felt like, I look back now and I think, man, I was a sucker. There were so many people that just came into us and said, oh, you guys are the second ones qualified. We're here to help you. Let's do this, let's do that. And, I'd pull my team in, because I depend on my team to make decisions a lot. I can't make them on my own. Sometimes I just don't trust myself. So, we failed several times. And I think the first year we were with you guys, we raised $800,000, and then we were suspended by the SEC. And we were suspended because we missed a filing that was misinterpreted, and it almost cost us, the company. It was a battle, and we recovered. We won the case. We beat the SEC on this, and we feel very lucky. And we re-strategized, and I got to tell you that the 125 investors that we got from our Reg 506C, immediately when the judge threw down the gavel and said, hey, this case is dismissed, we made a couple of calls, and our investors came in and helped us. And a lot of the investors, we did some updates on new progress because the company was still progressing while we're in this stage. And, we just kept updating, and, we email campaigns. I got to say, email campaigning, that's one of the hardest things there is to do. You think, oh, it's just an email. It's really not. You launch these email campaigns, and, man, you fail. You fail. And you buy all these, you're allowed to buy, you're allowed to solicit. So, you fail, pretty soon, you can't even send an email because you're blacklisted, so all these little things that you've learned, and then social media and how many times that failed, and, and I think it's because of our pure determination after beating the SEC at this, it was just it was a late filing, that was it. But after we beat that, it was a whole different mindset with myself and my team. Everybody came in, and the progress that we've had since, we've raised, $4.5 million. That was a year ago, and we're accelerating, and now we're getting ready to launch another one, and so many different things have happened to us, And it's the sheer just determination of just going through these things and having the right people that have the same mindset and just going at it every day, every night. I mean, I sleep, but I certainly don't turn it off. And, you know, I think my wife's going to kill me one of these nights. But anyway, it's just a lot of hard work, you know, and going through these processes, I think the social side has really helped us. But I got to say that most of the stuff that we've seen growth in is because of the investors that have plugged in. They've either come through one of our acquisition companies because we're practicing a roll-up strategy right now. We're bringing other companies to the plate to increase our value, increase our revenue. And a lot of these guys are seeing what we're doing, and they're jumping in and they're investing and they're part of this other company or they're management of the other company, and they're seeing us update constantly. And I really think that the update process at StartEngine is a very, very important aspect to anyone that's on this platform or going to be on this platform. You need to be operational. You need to get things operating as fast as possible and start updating people. And if you're a Reg A, hey man, pick up the phone. You know, all of our big investors, you know, we talk to every one of them. We talk to the little guys too. We send out samples of our products and we want their feedback. Because we're a products company, we kind of have that edge of being able to send them, you know, hey, they just invested $20,000. Let's send them a case of product. Next thing you know, there's another $40,000 coming in. So, I mean, just the communication process, all the little things put together has really gotten us to the sweet spot that we're in right now.
Yeah. And Hill, you have a really interesting story at Digital Brands Group and Distilled. I think one of the most common questions that I get after a company has raised successfully, and you know, you hear us today, you know, always be raising. Well, how am I supposed to raise more money when I just tapped into my audience and I did that already? And you guys are on your coming on your fourth Reg A Plus offering. Talk about how you've been able to be successful, not just in one, but two, and then three, and now coming up to four. How you've been able to maintain that success and kind of dip back into the well.
Yeah, in fact, everyone's gone up from the previous one as well.
Right.
So it's almost $9 million in total between the three. And what we found is it's about momentum, at least for us. The nice thing about being an operating company and at least selling apparel is we can go out there with monthly sales. We can talk about growth year over year. In fact, when we did our last one, which closed in January, we put out a press release very early January. There was 2.5 months left to invest. We had we grew 100%, our first $1 million month. And that just drove a ton of investment. So I think it's a lot about creating fear of loss and really driving home you're missing the boat. I feel that it's also a lot of webinars and having those conference calls and going through them and being there for the Q&A for everybody. Because it is hard to pick up and call every single person. But if they're on the Q&A, they feel like they're hearing you, and it's more dynamic in that regard. So I think it's a lot of storytelling. You really have to think about what story, it's almost like who you are, why does it matter, and how's it going to impact them? And you've got to nail those first things like that, and then tell all the momentum around it, and constantly be updating them with that to that point. I think that's the secret.
Right.
At least for us.
Yeah. Go ahead, Mark.
I just wanted to touch on something that these guys kind of alluded to is talking with the investors and calling them on the phone. From my standpoint, there was no investment too small where I would not answer the phone. So I think our minimum raise was $200, and I would answer 20 or 30 calls from individuals that put $200 in. And the reason why that's so important is because then they tell their friends, and then they tell their friends, and they tell their friends, and it's just this cascading. Like, I talked to the CEO of Atlis Motor Vehicles. This guy's a nice guy, right? Like, well, at least I think I'm a nice guy. But you know, it's just there is no investor that's too small. There is no one that's talking on your site. And I think someone alluded to it earlier today that the little investors are probably the ones that are bugging you the most. But it's so important that you put that out there and you talk to them and build that rapport with them, because that's just going to resonate with everyone else, even the larger investors that are out there.
Isn't it like when you make that call, you know, because I have a team of people making the call now, and I got to say that, you know, we get this all the time. Wow, you're the very first company at StartEngine that's called us. It's starting not to be so but when we started like a year ago really diving in, it really was a sense of gratification that they were getting a customer service call from the company they invested in. It wasn't even to sell them, it was just to say, hey, we're checking your phone numbers, we're checking your email, making sure you're getting the updates. And that, just that person that's gratified, they're, you know, our minimum investment's $420. They get back up there, and all of a sudden we see their name up there. And it's just for saying hi. Well,
Yeah. Just quickly, Mark, I want to start with you, and then I know Hill and Matt have a little bit of a similar trajectory of where the business is going. Talk about what's next for Atlis right now. You've raised $1,070,000, the max in Reg CF. You know, what's next for Atlis Motors, both in business and fundraising?
Yeah, so we'll start with business. We are completing the development of our prototype vehicle. We're starting to build our team. We're starting to build an executive and leadership team. We're starting to identify engineering, marketing, sales, kind of across the gamut, start building those plans out, identifying, it's just basically growing the business. Our next biggest step is 100 vehicles in customers' hands by the end of 2020. And that is a daunting task that we can't do with the small team that we have today, but we know that we can do it. So we're going to start building that team today. And then on the funding side, I have insanely ambitious goals. I want to raise $50 million in a Reg A Plus campaign. That's what I want to do next.
Nice.
And it's not a matter of can it be done, it's going to be a matter of how do we do it, then let's get out there and do it.
Hill, what's next?
Yeah, so we're actually going to announce our fourth one, hopefully next week, on StartEngine's page and start that process again. And then we're going to roll it into a IPO listing, most likely on the OTC QB market, because it tracks very evenly. We're already reporting to the SEC, and it's every 6 months, so it's very easy for us because we're already there. And the QB market follows the same guidelines as Reg A, so that's easy. It's hard to be on the NASDAQ if you're sub 250 because there's no trading volume, and it's institutional investors, and they have to write really large checks. So we think you go OTC, then uplist to the NASDAQ as you get to 250. And I think what y'all heard before is we just constantly hear that if there's a path to liquidity for their shares, there's a lot more willingness to step into it because they know they're not going to get stuck.
Right.
And then secondly, the other thing I'd say is for us, it makes the acquisition strategy a lot easier because you're going to companies and you're saying, I'm going to give you a liquidity option, not just private shares. Because it's really hard for companies to say, oh, great, you want me to give up more control for private shares, what's the play? We're actually finding we can pay a discount to the premium, significant discount, and say, great, where else are you going to go to get liquidity? We're the only game in town. So that's the game plan there. So hopefully by August, we're listed on the markets at the latest.
Great. Matt?
nice. That's awesome.
Thank you.
So our situation's a little different. So one of our divisions is a service company, and it's a pest control service company that delivers natural products. And our core business is located in Malibu and Calabasas, and you know, that's how this division started. And it turned into a pest control products company that's now nationally positioned in distribution and now going worldwide. So we're practicing a roll-up strategy. Currently, we're in multiple non-disclosure agreements with multiple service company and other green products companies. I'm working very closely with a consulting group and an investment banking firm who want to tailor us and push us up to the NASDAQ. So we just applied for our symbol. They've reserved it for us. It's MXRX. We have aspirations of bringing, you know, $27 to $30 million in revenue and about $10 million in assets on the bottom line from these roll-ups, and then having the investment banking community prop us up and do an IPO out on the NASDAQ. So we've got big aspirations. We're hoping to get this done sometime end of the year, into the new year, but we're really pushing hard to get it done, and we believe we're going to get it done.
So I'm getting the signal here, but I do want to end with, and don't worry, we'll have time for questions. You know, everyone will be at the cocktail hour, so I'm sorry we won't get to questions here. But the last thing I want to end with is, you know, for the entrepreneurs in the audience, what is your advice for them? You know, choosing equity crowdfunding, and just kind of give your parting words of wisdom. Matt, we'll start with you.
Well, I hope nobody takes offense to this, And you shouldn't, because you're successful at CF. But in my opinion, using, and you can go to Alan and Howard and the group and say, hey, I want to do a 506C for a CREDS, and they're going to help you with that too. I highly recommend that, because that's going to allow you to communicate. That's going to allow you to update. That's going to allow you to do a lot of stuff. That's where you start. That's where you get the capital to go in and do the things with the Reg A Plus to get in that position. The Reg A Plus world is the great world. It is a great world to be in. There's a lot of obstacles, but if you bring the right team in and you focus hard and you move to Reg A Plus, that to me, that was a sweet spot for us. I studied it, I watched it, I've seen CF. I know I have several colleagues of mine. The company I used to work for launched a CF, and it's failing because he doesn't have a team and he doesn't have the capital. So you're one of the rare ones that has been very successful. So good for you, and I'm super glad to hear you're going to go Reg A and just chase it down. It's a lot of hard work, guys. Be ready for it, but if you work hard and you're dedicated and you don't give up, no matter what the obstacle is, you'll be successful.
Mark?
Yeah, just to reiterate that, there will be times where it doesn't seem like you're going to go forward, where the campaign stops, right? Things slow down. It looks like it's towards the end and you're not making any progress. Just, he mentioned updates, like get out there, push updates, push stuff on social media, send emails to people, direct message people that you don't even know, right? And just start pushing it out there. If you don't have the funds for advertising, do whatever you can to just get out there and be visible in the world. Write things on LinkedIn, do whatever it takes. Just keep pushing forward and you will progress. We did have times where things slowed down and we just kept pushing, we kept moving forward, and it just starts to grow. But to his point, it is a lot of hard work. There's a lot of ups and downs while you're doing it. There's also a ton of fun at the same time. You get to meet a bunch of people that your customers. You get to meet all these great people that are interested in what you're doing, and then you also get to meet all the people that don't want you to succeed too. They are the most fun, though.
The first thing I'd say is set a low hurdle, because momentum begets momentum. So if you put a big hurdle up there, like we're going to raise 250, it's going to take you a while to get there, and then that's actually going to slow you down. So what we found is, say you're only going to raise this much, and then you clear that hurdle, and then people are going to go, oh, wow, they already beat their number, and now they're 100% over in 200. So I think it's a big momentum game, and I think it's just brick by brick by brick. It's not going to go boom. It's going to go like this, and you just got to stay in this game as you go here, and a key is create momentum and fear of loss. You've got to weave that into every communications you create, because otherwise they're not going to be even in the top of your brand awareness, and if they don't think they're going to miss anything, why do they care?
Great. Well, that wraps it up today. Thank you, panelists, and thank you for everyone here for attending the StartEngine Summit. I'm going to turn it to Max to close it out, and we'll see you at cocktail hour.